Hi, welcome back to Joe Blogs. In today's episode, I want to provide you with an update as to what's happening in Argentina. If you've been following the channel, you'll know that Argentina is currently in a state of crisis. Inflation is running at its highest level since 1991. The Argentine peso is at its lowest level of all time. The country has a huge amount of debt, has run out of cash, and to make matters worse, an ongoing drought has devastated the country's agricultural output. As a result of all of these factors, Argentina is now sitting on the brink of a debt default and economic collapse, and the current president has announced that he will not be running for re-election in October, as has his assistant and his main rival. So in today's episode, we'll have a look at the latest inflation figures that have been published by Argentina, which have come in at 114%, making Argentina the country with the fourth highest rate of inflation in the world. We'll have a look at what's happening with food inflation and what the Argentinian central bank's forecast is for the end of 2023. We'll have a look at what's going on with interest rates because, as you'll be aware if you follow the channel, the traditional way of dealing with high inflation is to raise interest rates. We'll have a look at what's happening with Argentinian GDP. We'll then have a look at Argentina's current debt situation, what repayments are due over the course of the next 6 months, and what's happening with regards to the IMF bailout facility. We'll then have a look at what's happening with the official exchange rate for the Argentine peso, and also the blue dollar or the black market rate. And then finally today, I'll wrap up with my summary as to what I think is likely to happen in Argentina over the course of the next 3 to 6 months. This chart shows the movement in inflation in Argentina over the course of the last 12 months. And as with previous charts that we've looked at, the bottom of these charts is not zero. On the right-hand side here, you can see that the bottom of this chart actually starts at 60% and goes up to 120%. So you can see that in June 2022, inflation in Argentina was running at 64%. And in every single month since then, we have seen inflation increasing. It was 71% in July, 79% in August, 83% in September, 88% in October, 92% in November, 95% in December, 99% in January, 103% in February, 104% in March, 109% in April, and the latest figures for May 2023 show that inflation is now at 114%. So what that means in real terms is that over the course of the last 12 months, the price of everything, on average, in Argentina has more than doubled. Now, if you follow the channel, you'll know that we've looked at a lot of countries that have high rates of inflation. But once you get past 100% inflation, that is officially out of control. There is no way that the citizens of Argentina are able to cope with prices more than doubling on an annual basis. And of course, these are the official figures and these are an average. So what that means in reality is that actual prices may well be increasing by significantly more than double. And I think the other trap that you can fall into when you're looking at analysis like this is to think that this is common in Argentina. This goes on all the time, so therefore it's not really big news. But if we expand this chart out to show what's been happening with inflation over the last 25 years, you can see that the current rates of inflation are significantly higher than at any time in the last 25 years. Back in the early noughties, inflation was actually running at very low rates in Argentina. However, in 2003, the country did experience a large increase in prices when inflation hit around 40%. However, that was a relatively short-lived affair, and inflation came back down to a more manageable level of around 10%. And over the following 10 years, inflation stayed at around 10%. However, in 2015, inflation started to increase again and got above 20%. And between 2015 and 2021, Argentina started to experience increasing inflation. And by the end of 2021, inflation was running at around 50%. So there's no doubt that inflation has been an ongoing problem in Argentina for the last 8 years or so. But over the course of the last 12 months, we've seen a marked acceleration in that problem. And now that inflation is running at more than 100%, the problem is extreme. This chart shows the movement in food inflation over the course of the last 12 months. And once again, the scale on the right-hand side here starts at 60% at the bottom and rises to 120%. So you can see that in June 2022, food prices are rising by 66%. That increased to 71% in July, 80% in August, 87% in September, 92% in October, 94% in November, 95% in December, 98% in January, 103% in February, 107% in March, 115% in April, and the official rate of food inflation in May 2023 is 118%. So as we just discussed for general inflation, that means that the price of food has more than doubled over the course of the last 12 months. And this is the real problem in Argentina, because around 40% of the Argentinian population are now classified as being in poverty. They are below the breadline. That means that they're spending more than 80% of their income on food. So when you have a situation where prices have more than doubled over the course of 12 months, that causes a crisis because the poorest members of society simply don't have any savings. They don't have any money that they can dip into to buy extra food. They only have the income that they're earning on a monthly or a weekly or a daily basis. So when food is doubling in price, what that means in real terms is that they can buy 50% of the food today that they were able to buy this time last year. And as I reported in my previous video, what that means in reality is that a lot of families in Argentina are going hungry. There are now lots of reports in the press and social media of people cutting down to one meal a day and situations where adults aren't having any food because they're giving all of their food to their children. And as I've said on many times before, it's easy when we're looking at charts and numbers and percentages to be a little bit blasé and think, yeah, 118% food inflation. What does that really mean? Well, this is what it means. It means that people don't have enough money to buy enough food to exist. And at some point, that means that we will get a breakdown in society in Argentina because the people will get to breaking points and they will say, enough's enough. Something needs to be done about this situation. So as mentioned at the start of the video, the current rate of inflation of 114% is the highest that Argentina has seen since 1991. And this chart shows the official rate of inflation dating back to the late 1980s, when inflation hit 200%. So the big question that we have to ask now is, where is inflation going to? How high will inflation in Argentina actually rise to? And this chart gives us the latest estimate that's been provided by an Argentina central bank poll, which is forecasting that inflation will rise to 149% by the end of 2023. But there are two issues relating to that. Firstly, this is just an estimate, so we don't know whether or not that will be the peak. And secondly, the central bank tends to be more optimistic in terms of when these things will come back down, rather than what's happening in reality. So there is a distinct possibility that Argentina could get back to the 200% inflation that was seen back in the 1980s. And just to put the current rate of inflation of 114% into context, this chart shows the official rates of inflation for the G20, which are the 20 largest economies in the world. And you can see that Argentina is right at the top of this table. The country with the second highest rate of inflation is Turkey, where it's currently running at around 39%. The third highest at the time of making this video is the United Kingdom at 8.7%, followed by Italy 7.6%, Australia 7%, South Africa 6.8%, and the Eurozone at 6.1%. So 114% is more than 100% higher than the vast majority of the countries in the G20. And comparing the rate against every country in the world, Argentina currently has the fourth highest rate. The only countries with a higher rate of inflation are Venezuela, where it's running at 429%. And if you want to find out more about what's going on in Venezuela, check out the video that I posted recently. The country with the second highest rate is Lebanon at 269%. And once again, if you want to find out what's going on in Lebanon, check out the video that I posted. And the country with the third highest rate is Syria, which is a war-torn country where it's running at 139%. And I think it's interesting that number 5 on this list is Zimbabwe, where the economy collapsed a number of years ago, but inflation is running at a relatively low 87% compared to Argentina's 114%. And if you look down at the names on the rest of this list, these countries are either in a state of economic collapse or war or some other form of disaster. And this really puts the seriousness of Argentina's current situation into context, because Argentina historically was a world power. Back in the 1940s, 50s and 60s, it was one of the biggest economies in the world. But over the course of the last 50 years, things have gone horribly wrong for Argentina. And it's now sitting in 4th place of the list of countries with the highest inflation in the world. The traditional way of dealing with high levels of inflation is to increase interest rates. with the logic being that that increases the cost of debt, the cost of borrowing, and therefore discourages people from taking new loans. So anybody that wants to move house or buy a car or take a loan to go on holiday will certainly think twice about it when the price is rising. But it also means for a lot of existing borrowers who don't have fixed rates that the cost of their monthly installments goes up, and therefore that discourages people from spending, because if you're spending more of your disposable income on debt, that means that you're more likely to cut back on any discretionary spending. And this chart shows the movement in the official rate of interest in Argentina dating back to the start of 2022. And once again here we've got a chart with a scale on the right hand side that doesn't start at 0. The bottom level is 20% and it rises to 100% at the top. So you can see that at the start of 2022, the official rate of interest in Argentina was running at 40%. Now, obviously 40% is an extremely high rate of interest. But at that time, inflation was actually running at around 50%. So the central bank was continuing to raise rates to try to bring inflation back down. But as we've just seen from the analysis on inflation, over the course of the last 18 months, we have seen month-on-month increases in inflation. So what the central bank in Argentina has been doing is to continue to increase rates. So you can see from the stepped profile of this chart that during the course of 2022, the Argentinian central bank introduced a number of interest rate increases. And by the end of the year, the official rate of interest was running at 75%. But obviously the interest rate increases were not having the desired effect. And so in 2023, the Argentinian central bank started increasing rates again. And the official interest rate in Argentina is now 97%. So that means that if you want to take a loan in Argentina, the base cost of borrowing is 97%. Now, obviously, the bank will need to make some profit over and above that base rate. So it's likely that you'll be charged more than 100% interest on your loan. Now, that is one of the biggest discouragements that I have ever heard in terms of taking a loan. That is more than loan sharks take. So the Argentinian bank is doing everything in its powers to try to bring inflation back down. But as we've just seen from the analysis, it simply isn't working. And you may be sitting there thinking, well, why is that? Because surely once interest rates get to a certain point, it becomes completely undesirable for anybody to take any debt, and therefore inflation should start coming back down. But Argentina is experiencing a variety of problems, which means that traditional policies are not going to solve the situation. And one of the biggest issues that's going on in the Argentine economy right now is dollarization. A lot of people have abandoned the Argentine peso and have moved to using the US dollar. This chart shows the official exchange rate between the US dollar and the Argentine peso over the course of the last 12 months. And it shows that back in June 2022, one US dollar was trading for around 120 Argentine pesos. However, today, one US dollar is trading for around 250 Argentine pesos. So that means that the value of the Argentine peso has officially halved over the course of the last year. And if we expand this chart to show what's been happening over the course of the last 5 years, you can see from the shape of this chart that the devaluation of the peso has picked up pace over the course of the last 12 months, as the line has started to become more vertical compared with the previous 4 years. And back in June 2018, one US dollar was trading for around 27 Argentine pesos. So that means that over the course of the last 5 years, the value of the Argentine peso has fallen by around 90%. And when we see such a serious devaluation of a currency like this, it explains what's going on in the Argentine economy. Because the Argentine economy is currently a net importer, which means that the cost of the products that it's buying in is more than the value of all of the products that it's exporting. So Argentina is buying lots of things in the international markets, the vast majority of which are priced in US dollars. So when you're looking at a devaluation of your currency of around 90%, that means that the internal price that you're having to sell those products to your consumers at has gone up significantly. And that partly explains the extremely high rates of inflation that are going on in Argentina right now. So this really does become a vicious circle, because as the value of your currency falls, it increases the cost of all of those things in the international markets, which pushes up inflation, which makes your currency less attractive, which therefore brings down its value, which makes things in the international market more expensive, and so it goes on. So it's a really difficult circle to break. But the other major problem that Argentina is facing is that because of the high rates of inflation and the fact that the peso is devaluing almost on a daily basis, The people in Argentina have lost faith in the currency. They don't want to hold their life savings in Argentine pesos and watch those life savings diminishing in value. And as a result of that, a lot of people have moved towards using the US dollar. And this chart, which compares what's called the blue dollar against the Argentine peso, shows the black market exchange rate between the two currencies. And this shows that in the black markets, one US dollar is currently trading for around 483 Argentine pesos, which is almost double the official exchange rate. So that means in a real world context, the value of the Argentine peso is actually 50% lower than the official value. So that makes the situation even worse in Argentina. If you're having to buy things using Argentinian pesos, you'll need twice the amount to be able to exchange them for the equivalent amount of US dollars. And this black market rate really explains why a lot of people have moved towards using the dollar, because if you can be paid in dollars and make your payments in dollars, then you don't have to worry about what the exchange rate to the Argentinian peso is, because you're dealing solely in dollars. And that is the definition of dollarization. When people get to the stage where they're not interested in using their home currency, they just want to do all of their dealings in US dollars. And when you get to that point as an economy, it becomes really difficult for the central bank to keep control of what's going on. And that partly explains what's happening in Argentina right now. The central bank is doing everything it can to try to bring inflation back down. It's raising interest rates. It's trying to discourage people from spending and doing all the things that are driving up inflation. But if none of the people are actually dealing in Argentine pesos, increasing the rate of interest has absolutely no impact on them. Because if they're just dealing in US dollars in cash, then what's happening in terms of the official interest rate and all the other things has no bearing on their lives. And so what we've got in Argentina now is a split economy. We've got the official economy, the official exchange rate, the official rate of interest that's being handled by the central bank and the government. And then we've got what's happening on the streets of Argentina, where people are using US dollars, they're being paid in US dollars, and nobody cares about what the official rates are. One of the reasons that Argentina is in such a state of crisis is that its GDP is growing at a slower rate than its level of debt. This chart shows the year-on-year movements in GDP over the course of the last 3 years. And as with the accepted economic principle, Argentina publishes its GDP data on a quarterly basis. So you can see that at the start of this period, GDP was significantly negative, minus 19% in July 2020, minus 10% in the following quarter, and minus 4.3% in January 2021. And of course, that was the period of the COVID-19 pandemic, when the whole world went into lockdown, most businesses shut their doors, there was very little trading going on, and that meant that we had negative GDP for most countries. So that wasn't unusual. We then saw a lot of countries bouncing back strongly when the COVID-19 restrictions were released, and Argentina did see an element of bounce back, peaking at 18.1% in July 2021. However, it was relatively short-lived, and we saw GDP growth then coming back down to 11.8%, 8.9%, 6%, 7.1%, 5.9%, and the latest official growth in GDP figures is 1.9%. And if we take a step back and look at the overall trend here, you can see that over the last 7 quarters, there has been a significant downward trend in terms of that growth of GDP. And if that trend continues at the current rate, it's expected that over the course of the next 3 or 4 quarters, Argentina will see a contraction in its GDP, which is obviously going to be extremely bad news for a country that has high levels of debt and needs large amounts of cash to be able to service that debt. This chart shows Argentina's total debt dating back to 2015, and we've got 4 different categories showing on these bar charts. The largest category, which is the dark blue section at the bottom, relates to government debt, so that's the official amount of money that the government has borrowed from international sources. We've then got household debt, which is relatively small, corporate debt, which relates to all of the corporate borrowing from the companies in Argentina, and then finally the financial institutions is shown at the top. And what this shows is that over the course of the last 8 years, Argentina has had high levels of debt, but the amount of government debt, so the official borrowing of the country, has increased significantly. Back in 2015, total debt across all 4 categories was around $375 billion, and the government portion of that was around $220 billion. Today, the total amount of debt is running at around $500 billion, and the government debt is now above $400 billion. which means that over the course of the last 8 years, the government debt has increased by more than 80%. And the $400 billion of debt that Argentina currently owes includes the current $43 billion facility that's been agreed with the IMF. So that bailout facility represents around 10% of the total borrowings. So it really puts into perspective the sheer amount of debt that Argentina has right now. Now, unfortunately for Argentina, debt comes at a cost. You have to pay interest and you also have to pay repayments on that debt. You have to give the money back. And this chart shows the scheduled debt service payments that Argentina has to make over the course of 2023. And the colour coding here shows the 4 different types of debt that Argentina is having to service. At the very bottom of all of these bar charts in dark blue are the bonds that Argentina have issued in the international markets. Above that section are loans from international financial institutions. The third section, which is the largest section on most of these bars, are payments due to the IMF. And then at the top, we've got other payments. So if we start off by looking at the situation for June, you can see that Argentina is scheduled to make around $4 billion of repayments, and $3 billion of that is due to the IMF. In July, the total payments that are due are around $4.25 billion, and once again, around $3 billion of that is due to the IMF, and around $1 billion to the bondholders. In August, the scheduled debt payments are around $1 billion, split roughly 50-50 between the IMF and other debt. The repayments in September are around $2 billion, with around half of that coming from the IMF. In October, the amount is $3 billion, with the lion's share of it due to the IMF. In November, it's $1 billion, with around half of it due to the IMF. And in December, Argentina has to find around $1.75 billion, and around 2/3 of that is due to the IMF. So if we take a step back and have a look at the overall situation here, over the course of the next 7 months, Argentina has to find $17 billion just to meet its debt servicing requirements. And the problem that the country has is that it doesn't have any cash. It's run out of foreign currency. And so making these payments is going to be a major problem from Argentina's point of view. And the only way realistically that they're going to be able to settle all of these obligations is by drawing down more money from the IMF, which obviously from the IMF's point of view isn't what the money is intended for. The discussions with the IMF are about trying to get the Argentinian economy back on track, getting to the point where the country becomes self-sufficient and can stand on its own 2 feet. Drawing down debt to repay debt is just robbing Peter to pay Paul. It's kicking the can down the road. It doesn't solve any of the fundamental problems in Argentina, and that is going to be a major sticking point from the IMF's point of view. And so there is a very real chance that Argentina could default on its debt obligations. So what's the summary and conclusion today? Well, I wanted to post this video to provide you with a latest update as to what's happening in Argentina. We've been covering the country's plight over the course of the last 6 months or so. And unfortunately, as you've seen from today's data, the situation is getting worse. Inflation is now up to 114%, which is the 4th highest rate in the world. And the only 3 countries that have higher rates of inflation, Syria, Lebanon, and Venezuela, are in a state of economic collapse. So this is a very serious situation from Argentina's point of view. And unfortunately, it doesn't look like getting any better anytime soon. And the Argentinian Central Bank are forecasting that inflation is going to hit 149% by the end of 2023. And as you've seen from the data that we've been through, interest rates are currently running at 97%, and the exchange rate for the Argentinian peso has completely crashed. And all of these factors are pushing the Argentine people to start using the US dollar rather than the Argentine peso. And that is a really serious situation from the Argentine Central Bank's point of view, because once that happens, it's very difficult to control what's happening in your own economy. But of course, the main reason that the Argentine people are doing this is that they're looking to survive. Nobody in Argentina is being paid anywhere near enough to keep up with the rates of inflation. So the cost of living is rising dramatically at the same time as the standard of living is falling. And more than 40% of the population are now classified as living in poverty. They're spending the vast majority of their income on food just to survive. So this has now become a very serious situation. And what usually happens here is that the IMF comes in with a bailout facility, provides a large amount of cash, and keeps the country ticking over. And back in 2018, Argentina actually negotiated a $57 billion bailout facility with the IMF. However, That facility was subsequently cancelled because the Argentinian authorities couldn't deliver on all of the terms and conditions, and it was replaced with a subsequent $44 billion bailout facility in 2022. However, Argentina is now struggling to be able to deliver on the terms and conditions of that facility, and the IMF has now called an emergency meeting to talk to Argentina about what it's going to do and discuss whether or not it's going to release an additional $10 billion. Now, as you saw from the data that we looked at, Argentina has $17 billion worth of debt repayments due during the course of 2023. So it needs that $10 billion just to keep the debt wolves from the door. But the IMF won't give the money over just to be used for repayments, particularly because quite a lot of those payments are actually due back to the IMF themselves. So it would be a case of giving the money and then taking it straight back, which isn't what the IMF is designed for. So the big question here is what is going to happen? How is Argentina going to get itself out of this situation? And what's going to happen over the course of the next 3 to 6 months? Well, as it stands at the moment, when you look at all of the facts, the increasingly likely scenario is that Argentina is going to default on its international debts. Now, if you follow the channel, you'll know that we've discussed Argentina's debt history in previous videos. It's actually defaulted on its debt obligations a total of 9 times. So this definitely won't be Argentina's first rodeo, but the problem that Argentina is facing is that when you default on your debt, it really destroys your creditworthiness around the globe. And so it's very difficult to get future debt. Now, the main reason that Argentina was able to negotiate 2 bailout facilities recently with the IMF is that around 10 years ago, it actually repaid all of its outstanding obligations. So it wiped the slate clean, it put itself back into the black, gave itself a better credit rating, and therefore the IMF was happy to advance more money. However, if it defaults on its debt now, it's going to be very difficult for Argentina to persuade anybody to give it any more cash. And the only deals that it'll be able to negotiate will be emergency deals to basically keep people alive in the country. And once a country gets to that situation, it is extremely difficult to be able to get yourself out of it. Unless you have large amounts of natural resources that the rest of the world want to buy, your trade is going to diminish, and therefore your balance of trade will swing heavily into negative territory. And that's exactly where Argentina is sitting right now. The cost of its imports is more than the value of its exports. So it's losing money. It needs help. And if it defaults on its debt and therefore limits the amount of cash that it can get hold of, then the situation is only likely to get worse. So the overall summary of today's video is that the situation right now in Argentina is serious. Inflation is out of control. Interest rates are off the scale. The exchange rate is in the toilet. The country is out of cash. It has a large amount of debt and lots of debt obligations that are due over the course of the next 6 or 7 months. It had a facility agreed with the IMF. However, it's struggling to be able to deliver on the terms and conditions of that facility. And the strong likelihood is that Argentina will default on its debt obligations over the course of the next 3 to 6 months. And that's only likely to make things worse. So I'll keep you posted on any further data and news that's coming out of Argentina as soon as it's released. Hopefully you found today's episode useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, particularly as my voice isn't quite as smooth as it normally is. I've got a bit of a problem with it today, but hopefully that will be resolved soon. And here's something to put a smile on your face.